Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. As a stock picker or someone who really likes to research about stocks and finding cheap stocks, what I like to do is go into different screeners and find stocks that are really high quality but at the same time at discounted price. Because as value investors or people that like to buy stocks in for cheap, you got to do this. You have to have a list of a day or two maybe once every 2 weeks, where you research by stocks and find stocks that are like, for example, that can go into your watch list and you can watch them. They will go up and down the stock market and you will find opportunities. As you can see right now here, this portfolio is actually down about £3,000 or so from where it was not long ago. From 3 months ago, we were looking about 81,000 plus, and right now it was 78,000. Okay, so it does happen, and stocks will go down and there will be opportunities out there. So what I'm going to do today, I'm going to share with you a technology or multi-industry stock. That's, for example, this company trades has a business basically in the industrial sector as well as the technology sector. But before we get to the stock in itself, I want to talk about a couple of things. And first one is the Patreon account. If you can join us, and that would be really helpful, where you can actually get access to all of these things. Once you actually join the Patreon, all you just need to do is just find the basic stuff that I posted, and you can find all of these things in there. And you let me know if you obviously have any questions, and that really helps the channel. So that's the first thing. So the company that we're talking about today is Robo Technologies. This company, like I said earlier, is a multi-industry industrial company. What happens is they have a business in the industrial. In fact, it was part of the industrial not long ago sector, but now it's actually moved to technology because a lot of their products is now software based. The stock's up for a year to date is about 12.5%, and the 6 months is about 14%, but just this month is just down about just less than 2%. So it's not bad. It's done actually okay, but it's not like your Nvidias and so on that has gone up about 200%, although it's part of the technology. So what I'm going to do right now is just go over like I said, this company has it's a software company right now. A lot of their products is actually software based. Okay, so they develop basically software technologies, enable product solutions. The company offers management, campus solutions, diagnosis, laboratory information management, enterprise management, information solutions, transportation management, financials, and compliance management. So they have all sorts of products that are mainly software side. So I'm going to show you the financials. It seems a little bit cheap right now, so we'll take it from there. Now, like I said, it's in the technology sector. Currently trading $488 per share, and they have an EPS of $27.16. Market cap is actually not that small or that big, so it's kind of medium kind of company. So 51, let's call it $52 billion market cap, which is really good. And then you've got wide economic moat for this company. So this means this company has a software, or it has a product, okay, that is widely used, and for other companies to get into this, basically they kind of have not monopoly, but they have a moat around their product for business, basically their business. Okay, so that means they are protected from their basically competitors, so they are slightly ahead of from their competitors and so on. In terms of beta, is about 1 right now, just above 1, and then in terms of PE, it was looking about 18 right now. Forward PE though is about 30, almost 30, but when you look at the sector, we're looking about 34, and the S&P 500 right now we're looking about 23. Price to free cash flow of 50, and PEG ratio of 2.23 right now. Now, in terms of dividend, this company pays dividend, but it's not a lot. Okay, we're looking at about 0.56% dividend yield. The payout ratio is really good for 17%. Latest increase for this company was 10%, and the 5-year growth rate is about 12%. The dividend growth streak is about 30 years in a row. So they are dividend aristocrat, which means this is a company that have increased their dividend 25 plus years. 10 is about contender, 25 is or more is aristocrat, and 50 plus is actually dividend kings. Now, annual payout, we're looking about $2.73 dollars per share for every share of this company that you own right now, and dividend safety 98%, which is absolutely safe. Free cash flow just about $1 billion, and free cash flow yield of 2% right now. So we normally look at about 3%, so this is all right. Free cash flow margin though of 42%, which is quite huge. In terms of profit margin, we're looking about 50%, which is really huge for this company. But normally software companies do have a profit margins that's slightly higher than other industries. Operating margin, we're looking about 28%. Return on equity, we're looking about 18%. And return on total return in the last 10 years, including dividends as well as the capital appreciation, we're looking about 15%, which is really nice. Return on invested capital, we're looking about 5.4%, which is quite low for this company, because they do have return on invested capital that is 18, but the invested capital is actually quite low. In terms of revenue, the compound annual growth in the last 5 years, we're looking about almost 11%, which is good. And their current ratio just below 1. Normally, if it's up 1 or more, that means the company can cover their current liabilities in the next 12 months if they need to. But they do have almost basically 1, so it's okay. It's not that bad. And they do have at least $1 billion because the danger is you don't want the company to go basically to the bank and borrow money and so on. But they do have some $1 billion that they can actually use if that was the case. Okay. Next year, they're expecting the earnings to grow about 8%, and then the 5 year after that is about 10%. So it's decent. Okay, no, you will never hear people talk about this type of company. This is a solid business. Okay, if they're growing about 10% every single year, that's really good. And obviously, if they have a business that is in demand and so on. Current price, obviously, we're seeing $488 per share. Fair value right now, according to Morningstar, is $540. That's about 9% discount right now. Fair value, according to Simply Wall Street, is about $594, and it's undervalued by 18.5%. Priced in terms of the target price from TipRank for the next 12 months, this is for only in 12 months, okay, it's 544. So more or less exactly what these other two have predicted, and 12% really upside and strong buy from TipRank. And Mornings, basically Seeking Alpha, is more or less the same, 540 and about 11% upside from where it is, and it is a buy. Now, according to Alzoya, it actually, business side of it, there's absolutely nothing wrong with the business side of things. In terms of interest-bearing debt, we're looking about 14%. Interest-bearing security, we're looking about 2.5%. They have been diluting their shares, so this could potentially be they had to raise some money basically to finance for a new deal, because this is one of the companies that have been buying other companies to grow their business, especially the software side of things, because they were part of the industrial side of things and they have actually grown their business. So that could explain. But for the last 3 years, actually, they haven't diluted the shares, which is absolutely fine. And then you can see previous years, they have actually, there's a couple of years where they stayed the same, and then the rest of they have been diluting their shares. So I'm hoping from now onwards they will be buying basically their shares. So that's something just to be worried about. In terms of revenue and where the company is expected to be, okay, you can see annualized. So we are now in 2023. So they are expecting from 5.37 to $6 billion next, basically this year, and then after that they're expecting about 6.4, almost $6.5 billion of that. And then if you look at the annualized EPS, you can also see it's head in the right direction. Now, when we look at the analyst results, so if we go to Seeking Alpha, okay, which is one of the websites that I've been using, if you go to earnings and you click earnings estimate, sometimes they only show you, if you don't have subscription, they only show you the first 3 or first 1 or 2, but you can see there's about 13 for 15 and 5 analysts looking the first 3. So if we focus on the first 3, you can see the year-on-year growth for the EPS basically is expected about 15%. Then after that is about 9%, and then 14% after that. And according to these 2 people and 1 person here, we're expecting 26 and then 20%. So this is actually it's actually quite nice to see that from. It's going to double by the 2027. So from $16 to almost $31 per share. Okay. And then same goes for the revenue side of it, from $6 billion to $8.6 billion. So 13%, 6.5%, 8.5% for the next couple of years. And I just thought this will be interesting to have a look at in Morningstar. They said, while stocks aren't particularly cheap right now, so that's general stocks, Robert remains one of our better comparable picks among the US multi-industrial names. We think of the firm as a high-quality cash compounder with a large runway for success. That trade is as slightly below fair value. So that's interesting. So it's about 9% right now under their fair value. It has a wide economic model. It seems a really good business. So yeah, we'll see. If you're interested, just do a little bit more research, go to their website, find out who they sell the products to and so on. And there's a lot more information you can find from just going through their earnings and so on. And final thing I want to talk about is today is on basically Friday, and Friday basically what's happening today is a lot of today the Fed will come out today and tell us whether they're going to raise the interest rate again or pause it. They're not going to cut, but that's basically what's happening today. So it will be interesting to see. The markets might be very, very volatile. So this week I've been really busy, so I haven't bought anything. So what I'm going to do is I've got the £250 and plus some dividends that I've received. So I'm going to use that money to actually buy something today, hopefully. So hopefully we'll see a red day and I can buy on a red day. Although I don't really like time in the market, that's my focus for today. Inshallah, see what happens. As always, obviously like the video, subscribe to the channel. Let me know if you have any questions. It takes a lot of time and basically effort to put these videos together and consistently do these things while I still have a family, obviously, and a job to do. So let me know if you have any questions anyway. Have a wonderful day. Assalamu Alaikum.